What was the 1,000? No, make it 1,300. Ah. It's good. I like this. This is very nice. This is very nice. We gotta go get a drink, something to drink.
Oh, that's nice.
It starts 7. And it goes 12. Maybe I will do 8. Yes,
Let's just do this one. Yeah. Let's change that. There you go. Boy, this is a... Let's go back here. So, yucky. First of all, does anybody have any questions for me about the way I set up the Russell? Yeah?
The range chart, are you using the tick data as well?
You have to. As soon as you're day trading, you're always using tick data.
Okay, and you used 1.5 and 2.5 in daily, is that correct?
Yeah. The daily means I'm not going to use it. I'm just defaulting it. Yeah. So it's 1.5 and 2.5. Yeah. The way I do this on my next period, I never double. I go under double, you know. So yeah, and if you look at the volume bar, you'll see I got 1,000, and in the volume bar I do like usually about 35% of what my own period is. On the range bar, it's more like, you know, a 65, 70%. And why is that? Because the range bar is meant to be a filter. I want that to be smooth. The volume bar chart is my trade administration screen, and I'm willing for that to be fast because the theory is that I'm going to filter out the losing trades caused by using that micro level by using the range bar as a filter. So I want the range bar to be smooth. I want the volume bar to be a little fast. If we let's take a look at this situation here, where the swing line broke over here and you pulled back to here. I'm kind of hoping that, you know, let's say you were at home. I realize this is hindsight analysis, but again, it's not particularly complex. When you broke this swing line over here, maybe you're not feeling that good about entering long. You could have, all right? That could have been an entry there. That's acceptable. But another entry could have been right here on the pullback to the swing line. What you're going to notice today and tomorrow as we do this, and if you adopt this methodology at home, is that 80% of the time when your swing lines flip, you go back and get a pullback. And that's actually, if you're willing to be patient, a much better entry. Why? Because your stop loss is smaller. So, if you were you did an entry here, this is one of those really nice times where you would have entered maybe $40, $50 at a better price. And you would still be in this trade unless you made the decision that you're a scalper. And here, I go 6-8 ticks normally when I decide that there's no momentum in the market and it's pointless. So I would be out of this market now with maybe a 7-8 tick profit. Or if for some reason I had reason to believe that we're going longer, then I would still be in. Now let's take a look. What would support that scenario? Let's just review the range bar chart since we started today and see what's going on there. We see we got one RB pullback swing trade right here, and we have a second one right here. That's good, but it's also bad because the follow through isn't very good, is it? I got to be honest with you, I have the worst luck when I do this stuff because in Orlando, when I did the live trading, we actually for 4 hours had a 20 tick range. For 4 hours, think about that. And,
20, was it?
huh?
It wasn't even 20.
Wasn't even 20. It was just, I actually was supposed to be up here for several hours, and it was so bad that I asked Mark and Dennis to take over, and I just crawled back there. And it seems that when I do this, this happens over and over. But even the stock indexes right now are kind of sucky. This would be a horrible day to be an S&P mini trader, wouldn't it? At least on the Russell, you can scalp, $50 here, $50 there. On the SP Mini, you'd be scalping $12.50.
So what do you use a 133 tick on scalp?
No. We can get a little more sophisticated than that. But I figure since we're waiting, the least I could do is, give you more information than I normally would, because I don't feel comfortable right now placing any. I don't want to be a breakout buyer here. Let's do one more thing. Let's see if we can pick the top. Let's see if we can pick the top of this. We're in an uptrend here. Let's try to pick the top. And how do we do that? Holy shit. Ooh, that is ugly. So I'm going to use this swing right here. Let me show you why I'm using this swing. Let's do the whole thing. If I want to start applying Fibonacci expansions, I got so much chop here. How do I know where to use? Well, since I broke this with this downswing here, I feel comfortable treating this as its own pattern, its own swing, and ignoring everything to the left. So I'm going to start using this for my Fibonacci price expansions, and we'll see how well they did, if they did well at all. And we may be able to use them in today's trading because they go up to the bands, and then the bands that are below them are still valid as support resistance levels. And I think we saw that in the EuroFX, right? It was trading for quite a while between two band levels.
Yuri, is the month of August missing there?
Yeah, did you do that? I can't explain that. I can't do anything about this because this is tick data, and our niche signal, you can only go back 5 days. Oh boy, I'm glad you pointed that out. So we can do esoteric analysis. No, that would not be right. No, this is like market bullshit. Okay, so let's see if we can do with the volume bar chart, because each signal will only go back a maximum of 5 days on tick data, so we're kind of behind the 8 ball there. Look how well that resistance level is holding. What we're going to do is I'm going to show you some, I realize this is a bit of a letdown for everybody. So what I'm going to do is I'm going to show you some of the filters I use in stock index trading, and they're really good. Normally I don't talk about this, all right? So I'm going to give, just because I know that this is not a good day, you don't get better follow through as you enter New York City lunchtime. So we're going to do that, and we're also going to look at a nice scalping system, slightly more sophisticated scalping system for stock indexes. Just before I finish, let's just make sure, yeah, false breakout, false breakout. In trading parlance, this wasn't good enough, and they almost had to do this. Let me do this, and then we'll go back to the Russell and stay there for a while. But I want to share this with you guys, because when you see this, it's valuable to know. This is the beginning of what's called the diamond. The chart pattern analysts would call this a diamond. Sometimes it's called a broadening triangle, and veteran retail traders call this stop running. But what it really is this is a pretty decent quality reversal pattern. So the market, probably not over the next hour or two, but maybe very early overnight, like in London, in European trading, I wouldn't be surprised to see most of this downfall getting retraced. Because this, even though it looks right now, the downtrend's not resuming. This is bullshit stop running. And this is a reversal pattern. So the high probability is that they're going to start challenging this either later today or very early tomorrow morning in Europe. So we'll see how that prediction holds up tomorrow morning. But right now, I think you understand that nobody really should feel particularly comfortable about putting their money on this. What's coincidental is, again, auction theory. We are in the exact middle of this range. Yeah, again. We've said that many times. That we're in the exact freaking middle. In the market profile chart, you would have the big belly right there, and we don't want to trade that. Okay, so holy shit. So what was I? Yeah, let's try to do fib expansions on volume bars. Then I'll get into the filters for the Russell and S&P. And the Dow Jones Mini. The Dow Jones Mini is actually pretty nice. It's only $5 a tick. If you're not used to day trading, you're just getting into it. It's a nice market to trade. It's the SP Mini volatility is very low. The Russell volatility is higher. It's more profit potential. But as an experienced trader, you're going to make more money there. And the Dow Jones Mini is kind of like right in between those two. It's not as slow as the SP Mini. It's got more profit potential. But it's not as hyper as the Russell. Every week when I trade the Russell, I get a few trades where I enter the market, and 90 seconds later I get stopped out, and then I watch the original direction of my trend go, because that's the nature of this market. It's just got more volatility to it. It's low cap stocks, and in low cap stocks, it doesn't take a lot of volume to make that index move. In the SP, which is almost entirely high cap stocks with a few mid caps, it takes a lot of volume to move that, and that's why the volatility is less. I'm just looking at this and shaking my head and wondering, these are 4-minute bars. Whew. Let's expand this, and let's take a look at the Fibonacci price expansion, if we can do anything with that. Ugh. When is this? I just want to make sure it's not July. It's July. It's my birthday, July 28th. Maybe that's a good omen. Okay, what we're going to do, because this is starting to get ridiculous, is I can go back to 9.6 on this. Those people who are used to day trading with me, they get emails from me, about what's going on in the markets. And this Fibonacci price expansion thing is something that I actually went 1 week just about, where every single day, we did kind of like a test, and every single day the price bands were calling the highs and the lows. So, I didn't want to send out an email every single day ad infinitum, but that was kind of like a demonstration that you can. This is something you want on your charts, fairly regularly when you're trading. Because even on a range day like today, you will start defining your ranges by those fib bands. When you issue a signal to the eSignal server to update tick data outside of just today, if you give it an order, update today's tick data, it responds in 15-20 seconds. If you wanted to go back a few days, it takes up to 2 minutes. So that's what we're doing now. I'm refreshing back to Tuesday of last week. No. I tried to do that X number of times, and I've never really gotten that type of a good feel for it. Interactive Brokers gives you an arbitrage meter that just does that, the spread between the current futures contract and the index. And so there's so much stuff out there that you can use, but none of it seems to, because you know what, here's the problem. Sometimes the futures lead and sometimes the index leads. If it's a news story, the futures contract is going to lead. If it's a group of stock traders either adding to their portfolios, adjusting their portfolios, cleaning something out, the index is going to lead. And that's the problem with playing the spread between we call it the premium between the index and the futures contract. You don't really know beforehand which one of those two is going to lead. That's the problem. I'm not even getting a refresh. This is just we're not even getting a refresh data on this. So here's what we'll do. Well, it's been about 2 minutes, right? It usually doesn't take over 2 minutes. This is just like general slow day. Let me see when this is. I want to make this look a little bit better. So this is the low I want to use. We can do this from last Friday's low. And that's 9.9 at 9.04. And if I expand this out, do I still have it? Yep, I got it. So let's do that. Look at that puppy nail it right there to the ticky. We're getting good at this. Okay, so one thing, because actually I was trading Friday. I was trading with the Eurofx and the Russell Friday. And when I was trading, I traded into this once and I traded into it twice. All right? And when price broke here, I traded right into there. You know, it's not a big profit. I'm not saying that, but it was easy to do. And I didn't trade this, all right? I didn't do anything with that. But when we got back above the swing line, I traded into here a second time, and that was the last trade I did that day, on Friday. Because I really like these bands. And over here, you can see that the high of the day on the Russell so far is like, you know, maybe 1 tick or 2 ticks above that band, and it's holding right now. So that's information for us. You know, if price were to break that swing line, that's just one more piece of information you have to support the fact that maybe this high is going to hold for a bit. All right, those Fibonacci bands right there. And because, let's just play with that one a little bit more. Let me do an edit on this and see what values I'm using. Just for fun, let's take a look at 1.38. And that would be the band. Okay, you see the band right there? So that's 1.62 and 1.38 on the other one. So that's information for us to use. And just because this market is moving at the snail's pace shouldn't really discourage us. If we get a break of this swing line here, I'm going to assume we're in a range market here too, and I'll happily be a seller down there. But now that I have this set up, let me show you some stuff you can use at home to help you make a determination. Do I want to trade this market at all? Do I want to trend trade it, or do I want to scalp it? Because with the stock indexes, we don't have to just use the Stoch RSIs. It's a little bit more sophisticated to do it the way I'm going to show you next. Okay, I just can't believe we have such flat. Every time I do this in public, we have these ridiculously flat markets, and it's very frustrating. It's not fun. It sucks. So I want a decimal 1, tick size of 1, and we're going to do vol D, and I'll explain what this is. If you guys get into this, you're going to have so much fun with this filtering system at home. It's just great. I've been using it for years. And when people get into this thing, we're going to be doing it in a few minutes, they tend to fall in love with it. Yep. So is that what I want? That's exactly what I want. Yep. And I want to do one other one. I want to do ADD. And then I'll explain what I'm doing in just about 2 minutes. Yeah, that part's correct. Let me just, for clarity, put that there in case somebody uses it in the future. And we don't want any decimals at all. That was a mistake. And that will populate these guys, and we'll be kicking in just a minute. We don't want that. We don't want that. We just want next. Perfectum window. That looks good. Let's do this one first. Let's refresh the data. for to do. Yeah. Normally that's a pretty quick refresh because we're just asking for 1 million bars per day. Oh, it did it. Good. And we applied just one Fibonacci trader indicator to this. And there it is. It gave me a lot more than, so all I need is today. And the indicator I want to apply is the balance. Yeah, that's fine. That's fine. Didn't get it right, did I? Why does it look so crappy? It doesn't. Yeah, I'm trying to figure. Why is it doing this? Like space zero, simple, none, color, draw type. That's what it is. Line. I want line. Much better. There you go. That's exactly what I want. And I'm going to condense this, and we're going to look at this in a minute. And hopefully this will help us make sense of what's going on today. And now we're going to look at this puppy right here. And let me just get this one set up. There you go. First, what are we looking at? I'll describe what we're looking at and how it's. So what we're seeing was just we had just right now, right? We had a second attack right here. So actually, you know, if I were at home right now, to be honest with you, what I would do is I would actually be a seller right in here. I would, as a scalper, just from there to there, and you know, you're only talking about $50. But that's a trade, if I weren't doing this right now, that I would do, because now I'm really starting to feel really confident about those Fibonacci bands acting as a resistance area for a little bit longer. But let me show you what I got going here. And I'll start with this one. This is something that most you know, traders, especially pro traders who work for hedge funds, mutual funds, etc., and are assigned the job of adjusting portfolio sizes for their employers, you know, they look at this to figure out entry points, exit points. Your larger institutions, just even a few years ago, when they had adjusted portfolio, they would do block trades, all right? They don't do that as much anymore. Now what they do is they hire a younger guy, they teach him the basics of trading, and if they have to sell a few million shares, like 10 million shares of a high cap stock, they'll scale it in throughout the day, and they'll scale it in using New York Stock Exchange internals, because you know, if you get just fairly good at that, you can save your institution thousands of dollars a day just by getting better, you know, entry and exit points for the portfolio adjustment that all these institutions do on a daily basis. So the first thing that they all look at is what is ADD? Well, that is simply advancing issues minus declining issues. That's all it is, and it's a cumulative index. In other words, there's no relationship to yesterday. Every day starts out at 0. And it just is a cumulative. So what can we gather by looking at this? Well, one thing I can tell you is that this ADD affects the Russell index more than it affects the Dow Jones or even the S&P. Because this is all the stocks in the New York Stock Exchange. And you know what? You can actually take a look at the movement of the Russell today, which began right around over here, and take a look at how closely it confirms the price action. Okay? So if I were to take my crosshair, you know, there's the first bar of the day. That's confirmed. Here's another higher high. That's confirmed. Then you see the downswing. You know, You actually have a confirmation there, and over here you have the beginning of a reversal, and over here you have the beginning of a reversal. And when this thing started going brain dead, notice that your every single rally is failing in here. Isn't that interesting? Your ADD line is actually flat, and every rally in the futures is failing. So that's information. That's good to know. You know, you wouldn't want to be a breakout trader here. You know, basically by this point right here, I'm sorry, by this point right here, you're saying to yourself, you know what, I don't want to be a breakout trader unless I see ADD go into a trend. But that's not all. We also want to use one other index, and that's Vol-D. Vol-D affects your Dow Jones index the most. This is advancing volume minus declining volume. It's also cumulative, and it starts every day at a zero value. However, just because I said this one affects the Russell more and this one affects the Dow more, they both impact the stock market, and they both work very well together, such that right now, let's take a look at what Vol-D is telling us. You definitely don't want to place a buy and a stop or be a buyer right here. You're looking for a penetration of the swing line now, and you have reason to believe that you would have some selling follow through into here. My ADD is flat, and my Vol-D is in the beginning stages of a downtrend. All right? So that's what the New York Stock Exchange internals are doing. They're acting as a filter for you. They're saying, one, it's okay to scalp here. So if I were to, let's do this again. You know, I said over here, when I got the rejection out of these bands, I would feel comfortable scalping going south. I wouldn't wait for the penetration of the swing line. And one of the reasons, you know, that's not that bad an idea is because right inside here, we're starting to get this reversal pattern going inside Vol-D. What else can I tell you? One of the things that people who know me, day trading now, going back for, you know, last September when I started teaching day traders, is when these two indexes diverge, when you have one going up and the other going down, you have some real choppy trading, and you don't even want to be a scalper unless you've got a good scalping system and you're going for modest profits. But if I were to go back and review most of my losing trades, it's when I had a discipline breakdown and I decided that I knew what was going on, and I'm trading while these two are diverging. When these two diverge, you know, that's telling you that the big money doesn't even know what's going on, all right? And, you know, and once again, you're placed in the position of trading against retail traders like us and market makers who are obligated to accept our trades. You don't want to trade against those people. Now, here's the good news. The good news is that when you have several bars of these going up in a row, you start getting confidence that you can trade in that direction. And there will be minimum 2 days a week where you see Vol-D and AD&D together trending in the same direction for a couple of hours. And that is actually, you know, people who trade my methodology, most of them trade the stock indexes, and most of them wait for that. They know two things. Some of the other stuff we'll discuss in a few minutes, kind of hard to do, but this is easy to do. Vol-D and ADD diverging, do not trade. It's a chop. The market is either going to go flat or it's going to go into a chop. Either case, you don't want to be there. Vol-DD and ADD trending over time, and we're talking like 3 bars have to finish here in your 4th bar, but ideally you see like a full half hour or more where they're trending together up or down. You take every single buy signal or sell signal on your VB chart and you'll be a happy person, because the professional traders are telling you they can't disguise it, they're too big. That's where they're putting their money. That's where the big money is. Okay, it's the sweetest type of trading. Like on a day like today, you don't have it, all right? But if we were to go back in time, and I can't, this thing doesn't seem to be refreshing data for me, we would have a situation. So this is interesting too. You know, we're kind of getting that situation right now that I'm talking about. where ADD has got a slight, hey, I'm up here on the day, and Vol-D has been going down for a while. And what we look at is not so much an investigation of these bars. We look at the balance point next indicator, and we look at its direction. So you don't even have to try to figure out what the bars are doing. You just look at the balance step next. This one is flat upwards, this one is downwards, and all you get is this kind of choppy behavior, and you don't want to be part of that. But several times a week, you will find setups where Vol-D and AD&D are trending together. And that's a fantastic thing, because that's when you know that the big money is supporting a trend. And when big money supports a trend, it continues for a while. Not just, even after they stop putting money into the market, it continues for a while, because even the self-directed at-home traders, their systems are kicking in with buy signals. All right, so it's very safe, and it's worth developing the patience to look for that. Just this one thing alone can save you, over the course of a year, thousands of dollars of losses of knowing when not to trade. They're diverging, and it can also add to your profits by knowing to do more contracts, hold on longer, and enter more trades when Vol-D and ADD are trending in the same direction at the same time over a period of time.
You only pick trades in that direction.
You got it. What I was telling you, I have a friend, going back for years now. He's been a scalper. I think he's beginning his 7th year of just being a scalper. And he only trades for 4 ticks, sometimes 5, but usually 3 to 4 ticks. I can't live like that. But what he does, he uses Vol-D, ADD, and the Stoke lines, and he primarily on a trend day, what he'll do, that is when they're both going up or both going down, he's still going for his 4 ticks now, but it's take your 4 ticks, the market retraces to a tick chart swing line, buy again or sell again, depending on the direction of Vol-D, ADD. And he just does that maybe 25 times a day. But if you multiply, 2025 by 4 ticks, that's a good profit. I tried to trade like that with him. He spent a day with me. He lives one city north of me, Seal Beach, but I couldn't do it. But by the market's open 3 hours, and I think my hands were starting to. I just can't do it. And he's older than me. So it's like. Which charts are those? Oh, Vol-D, ADD? Yeah. Well, here's all they are. They're 5 and 25-minute charts. 5-minute on, 25-minute next. All right? And then you just apply balance point next. That's all there is to it. Okay, so you're kind of like a new Fibonacci trader user? Let's do that for you. What I did was to make the appearance better. To make the appearance, what I did, I did a cosmetic change. I went into style and I got rid of the spaces. All right, that's the first thing I did. Then the second thing I did is I went into draw type and I changed it from step to line. The reason I changed it, let's look at it, what it looks like in step mode. I don't like that. Because you know what I'm interested in? What am I interested in when I use this? I'm interested in the trend, the current trend of Vol-D, ADD. So I need it as a line. So let's take a look at, that's what it looks like as a step. Now look at it as a line. See, now I got a better idea of what the trend is. Okay? And I see that Vol-D and ADD are kind of diverging. The other thing that really should be a red flag for you is that the Russell is up on the day and your advanced decline line is down on the day. It's not good. This is not a trend that one would expect to maintain itself particularly long. If you're up on the day on your low cap stock index and your entire New York Stock Exchange is down on the day, advancing issues minus declining issues, this is not a healthy trend. It's not something you want to get involved in. Okay? It's a clue. What? Say that again? Yeah, well, here's what I'm looking at. You see, that's a minus sign right there. Minus 232, yeah. I have a filter also. If the ADD is between plus 200 and minus 200, I consider that flat, because that's just portfolio adjustment. That's all it is. That's just, guys who work for mutual funds, pension funds, hedge funds, they're just adjusting the size of their portfolio for reasons which have nothing to do with their belief in the market going up or down. Oh boy.
Yuri, if ADD is trending strong a little bit, Vol D is flat or not opposite, but flatter.
Yeah, that's a good question. That's a good question. What that means is you do have a reason to scalp north side. Basically, if Vol D is flat, another way of looking at it, that's volume. Trends can't maintain themselves without good volume, can they? I mean, that is like Edwards and McGee basic, John Murphy. That's just charting 101. A trend cannot maintain itself without new volume entering the market. And since this is cumulative volume, all right, this is telling you I can't maintain this. This is telling you I can't maintain this, and it's not something you want to get involved in. Now let's look at the opposite situation, because we had this a lot last week. We had flat AD and we had rising volume. And if you were to review last week, let's say you took a 4 or 5 minute Russell index chart, what you would see is that it was incredible. Monday was Labor Day. The market would open, it would immediately fall, then it would consolidate just a few minutes, then it would start a trend up that would take out the close and basically double the fall from the open to the low of the day, and then it would just go brain dead sideways for 4 hours in a chop, and then in the last half hour it would rise, and it did this 4 days in a row. So you talk about nonlinear data streams having clustering patterns. That was a nonlinear data stream clustering pattern. It came, it went, we don't see it anymore. But every day last week also we had a situation where ADD was basically just flat and Vol D was rising the whole day, and that was the clue. I figured this one out for Thursday and Friday, that the last swing of the day late would be up, and I traded that Thursday and I didn't trade Friday because I was packing to come here. But at least I had the heartfelt satisfaction of knowing a prediction worked, even though I didn't make money. But that's something, these are just little tidbits, hints and stuff that are very reliable. And the reason they're reliable is you're not interpreting, when you use Vol DD, ADD, you're not interpreting a nonlinear data stream. You don't have to worry about noise reduction. You're actually interpreting linear data. When you look at advancing issues minus declining issues, that's actually a linear data stream. You can interpret it, you can apply statistics to it. It's good news. So these are things that tend to work fairly well in terms of filtering your trades. So if you're wondering, hey, what kind of trades can we do here? I just don't have the confidence to be a buyer in what I'm seeing here. But if we were to go down and break that swing line, yeah, I'd have confidence in being a seller, because my Vol D is going down, my ADD is kind of choppy flat, but it's slightly in negative territory. So I think you can see how I'm using the NYSE internals. It's a much simpler approach. I used to use the tick and the trin a lot. I dropped them, too complex, because this gives me all the information I need now that I have my VB and my RB charts to kind of direct me with the trade administration.
Can you go back to the start of the morning and tell us if you saw anything you would have taken?
Yeah, actually, we did that. We did that already. But basically, on this buy right here, it wouldn't have been a good buy. You can see right there, we got a swing line break right there. But if you look at our Stoch RSI cycle, at the time of that swing line break, it was falling. But let's do this. Let's just say you're really daring, and I don't recommend, just for fun. Because the blue line is rising like this, and that's my higher time frame, you don't really have to wait for 3 bars here to go north. Well, 1 bar completed going north means that the correction could be over. Okay. Now, see, this is an added layer of complexity. But you know, again, at home, this is what I do, and I don't think it's that complex that you can't pick up on it. What's this thing really telling me? The blue line is a larger time frame. It's a more noise-reduced chart, right? Because if you look at this, my own period, let me show you. My own period is 1.5. My next period is 2.5. I'm reducing more noise. At 1.5, if I go any lower than 1.5, I might as well not use this thing because I'm reintroducing market noise. So this blue line's pretty good in terms of a trend filter, and it's obviously up and it's still rising. So the red line is telling me I'm in a correction against an uptrend, and basically at about this point right here, when that bar finished painting, you know, and you moved into the next bar, now you're starting maybe, if you want, to look for buy setups here. All right, and that buy setup would have been right around this pullback area here. So you did not enter right here. You couldn't do that. You would have been filtered out. But this, either this break here or waiting for the pullback, would have been a valid trade entry. Yeah, when you look over here, you know, you're several over here on the break. You're up. You can see basically up, 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 up. You're just up. Just up. But a person like myself, I would not be using this as a trade. You know, if you did that and you're playing for an intraday swing, you're still in this trade and you're feeling good about it. But a person like myself would have exited 1 or 2 ticks below that band. And the reason I would have done that is my New York Stock Exchange internals are telling me, you know what, there's not a lot of volume and money coming into this market. Yeah, let's look at the first one. At this swing line break, I'm looking at this, and see, I don't like that. I want to wait for this thing to bottom and turn around. Because you know what? I got total faith and confidence that if I'm patient, I'm going to get a couple of clear setups every single day. You know, and I want to maximize those. And that to me is too close to that, you know, hey, maybe if I'm lucky, this will be the end of the correction. And luck doesn't work consistently.
Mm-hmm. Rockets up, but the range bar stoke just doesn't budge.
Or just ticks up a teensy bit.
Right.
Yeah, because the thing about the Stoch RSI that makes it sometimes, you know, that's its drawback, but that drawback doesn't outweigh the benefit because your Stoch RSI is really a filter, and it's really measuring the internal cycle. You know, Robert Miner was the creator of that indicator, and he did that back in the good old days when he was an active trader, making money, you know, student of the market, all that good stuff. You know, this was well before he became a vendor. It's like, you know, 1980s stuff, before he met Bryce Gilmore. And he designed it just for that one purpose, to try to, you know, not use it as a momentum oscillator, but tell me what mode I'm in, so you can do a multiple time frame approach and figure out what cycle that time frame is in, because the thing is, and that's really what I do, is when several different time frame cycles start to agree with each other, that's when you get your 25 tick move in a matter of like 10-15 minutes. You know, that's what you live for as a trader.
For a novice like me, I see that.
But here's the thing. Here's the thing.
Wait for the great setup.
Yeah, here's the thing. You know, when you're dealing with market noise and volatility patterns and all that, you know, it could have been 25 ticks the other way. You know, just because these indicators can't tell you every step of the way what's going to happen next, sometimes you'll see, wait a second, it just moved 25 ticks or 20 ticks, and I wasn't on it. That's okay. You know, new news is hitting the market all the time. These indicators aren't like ESP Psychic, where they know what analysts on Wall Street are saying. They don't know what government reports are saying, all right? So that's what happens. But what they do know is the cycle that you're in. And if you just play that over the course of a week, you're a winner. On a day-to-day basis, you know, you're going to have trend days, and you're going to have days like today. We call this sometimes the trickle day, where let's take a look at Valdi and see if it's maybe changed its direction. I doubt it. Where the New York Stock Exchange don't really support this, but very slowly, you're just trickling up. Okay, the fact that you're not on that, it shouldn't bother you. Because over the course of time, and we're not talking months, we're talking over the course of days, this stuff will protect you very nicely. If the only time you trade is when the big money is trading, you're trading with them, how do floor traders get rich? Some floor traders are 1-2 tick scalpers, but the ones who get rich, they don't do that. They look at the commercials and the institutions and the hedgers, and they go, hey, if the hedger and the commercial are both doing the same thing, not just one of them, but if both of them, who have completely different intents in trading the market, if they're both doing the same thing, all I got to do is piggyback them, and I'm going to make a lot of money. But that implies you could be standing in a pit with all these monkeys jumping around for hours, doing nothing besides waiting. It's okay. So we simulate that. We don't know what's going on with the big traders, but we get a clue by, the New York Stock Exchange, by using this, you get a big, big clue. And in DRFX, by waiting for all 3 windows cycles to line up, you start developing really high probability patterns. So that's the underlying philosophy. So the bad news is that this is telling me right now to actually not trade. So I got really bad news. I don't know what to do. Any questions, anybody?
How's the euro?
Yeah, let's look at the euro. Oh, look, the euro is right in the middle of its trading range. Oh. Here's what we're going to do. We're going to do that, but we're going to do that a little bit after 10 o'clock. Because a little bit after 10, because these markets are brain dead, I'm going to give Mark and Denise their chance up here. I'm going to go back there. And then at that time, we'll look at crude. But one thing I could tell you now too, at home, I may be looking at 3 different markets to day trade. I have a dual monitor set up. I have the Russell on the left, and the first maybe 25% of the second monitor has my Valdi ADD, and then the rest of that screen has my EuroFX, all right? But what I'll do sometimes, usually a few hours after the NYSE is open, I want to make a determination. Hey, should I switch to the crude oil mini? Because that's been a pretty decent contract lately. And here's what I do. I just stack up 3 of these range bar charts, next to each other. I'll have the EuroFX, I'll have the Russell, and I'll have the crude oil. And I just take a look at the cycles. And when I look at this, I say, nah, not really. That doesn't look that good. And then I'll go over here and I'll say, not bad. I'm willing to accept that. But let me take a look at crude. Maybe crude has a situation, where both are falling at the same time like that, and you can see what the market does. As soon as both of them, you don't have to wait long. As soon as both of them start going in the same direction, that's when you get the big quick thingy, like that. And I'll look at just the cycles, and I see, hey, does anything catch my eye in being terms of a clean cycle inside that market? And that's the market I want to be trading the next few hours. One other thing that was actually noticed here, this balance point is pretty interesting. You can't trade its break on its own, but notice that when you start developing a bit of a trend, that balance point actually does act as a dynamic resistance area. See how it's like unable to penetrate it? Let's take a quick look at the rest of the stock indexes and see what they're doing. I can see that basically if you're plus or minus a point within that range on the SP, NASDAQ, or Russell, that's really unchanged, right? That's just random noise. And in the Dow Jones Industrials, I use 10 points. If you're like plus 9 or minus 9, I consider that unchanged because that's just random market noise. So another way of looking at it is, I look at the percentages. So I got my industrials and I got my SPX. I don't care about the hundreds. Look at the tenths, it's 0. So that's kind of giving you an indication that these, except for the NASDAQ, that these 3 indexes, they're really not supporting much movement today. I think we need to hire a financial astrologer to tell us when we're going to have trend days. We should talk to Linda Long about that. Where is Linda? Her mother's a financial astrologer. We got to start getting her mother involved. Yeah, I'm serious. I mean, we should. You know, this is just like Orlando. Actually, this is a little bit better than Orlando because if we would have started trading just 10 minutes earlier, we would have caught some stuff, and we had a nice trade right here. Granted, I would have taken it for a great big 5 ticks. Yeah, I would. I definitely, because again, my crystal ball wasn't working at that time and I didn't see this. Let's take a look at what everything looked like at that time. When you broke here, it's kind of like, that's really not that bad. I don't look at the bars. My ADD at the time of the break was rising. My Stoch RSI was rising. This Stoch RSI is up here. This Stoch RSI is rising. And I definitely, that's fine for a scalp. Yeah, Val-D is more high cap stocks anyway. If you take a look, I mean, Val-D is actually almost irrelevant for the Russell today. And, the ADD reflects your entire New York Stock Exchange. Your Russell's made up of 2,000 stocks, and they're primarily low cap, and a couple of mid caps, mainly low caps. So this and this mirror each other pretty well. And what you have right now is that you got a divergence pattern between ADD and Val-D, and I'm just amazed that the futures are maintaining themselves up here. That's just amazing to me. I mean, I could understand this because this reflects high cap stocks a lot, all right? But the fact that I'm down on the day in ADD and I'm in a bit of just a small little down correction and my futures are up here, that's just amazing. We will patiently wait for a trade setup going south. But again, one thing we can notice too, yeah, I am definitely waiting for a trade setup going south, but I won't place that trade until I at least penetrate that swing line. So, same philosophy. If I were to place a sell stop below here, while this was falling and, this is just chopping around, maybe my analysis was wrong, but I didn't get filled, So that's safe. These swing lines, you can actually see, look at the swing line support, swing line support, swing line support. These swing lines are really good. By looking at this in the Euro this morning, the examples yesterday, the Russell now, hopefully you're developing some confidence. You're seeing some potential here. You don't have to be busy, drawing things, analyzing different windows. You can actually be pretty patient and calm and just wait for very specific trade setups to occur. And that's maybe an easier way for most of us to day trade. So what I said what we were going to do next. We were going to take a look at a scalping screen for this. Now, most scalpers who use trade the Russell, they'll use 55 and 89 ticks. When I decide that this market is brain dead, my range bar chart's not going to be of any value. All right, that thing is for identifying things when you're in trend mode. So you can just forget about the range bar chart now. Val-D and ADD could be helpful in keeping me in the direction I want to go. We're starting to get a situation here, though. Maybe what we should do is maybe even do a trade setup here, because what I'm noticing, I'm starting to like this. We're at the bottom of a range here with ADD, but another view of it is that this is starting to agree with this. So placing a sell stop under there may not be that bad an idea. If we're in a range and ADD is going to start cycling back up, this will go back up here and I won't get filled. But if this is the beginning of a corrective swing down, maybe I'll be able to catch a swing from there to about here. So why don't we do that, and then I'll start talking again. Oh, I should determine the price, shouldn't I? Yeah. Do I have the, don't I have the, show values, yeah. Of course, I can't see those values. 682.80, so let me go 2 ticks below that, 682.60. Let me just verify I'm not doing something stupid. Yeah, 682.60 is fine. Yep, so we're going to place a sell stop in here at 682.60. and it just accepted it, so we're clear right now. So it's, pretty simple. If this swing line acts as support and this is a cycle, I don't get filled. If this is a reversal pattern, hopefully we'll grab a quick 5, 6 ticks.
Well, Yuri there, there's still some rainfall. She said you just gotta discount that.
Well, when you have no momentum, it's like, yeah, that's exactly what I'm saying. I'm scalping right now. If I were looking for a move down to here, then I'd agree with you. I go, hey, I'm making a mistake. I'm going against my cycles. But, if I'm using the logic that, this market doesn't have any momentum, these ticks are changing slow, my New York Stock Exchange internals are definitely not supporting higher highs right now. Yeah, I feel comfortable. Yeah, that's the thing. So, if this market, if the futures, what is the freaking index doing? Oh, the index. Let's look at look at that index. Wow, it's starting to show a little bit. Yeah. Wow. So what I'm saying here is that we're starting to get a little bit, it's in the scalpers time frame, it's a respectable setup.
Does the AED show any symmetry?
Yeah, it does. Yeah.
So you could use Fibonacci?
Why? Because the ADD has been used for so many years now, 15 years at least, by so many day traders and market professionals, and that you can actually do study. This thing does Fibonacci expansions, retracements. You can plot stochastics on it. It's pretty amazing. I need to take a 2-3 minute break. I apologize. I've been drinking coffee and this, and now nature's telling me I have to go do something about it. So I apologize for that. So I don't want to leave that there, but as soon as I come back, I'm going to put that trade right back on. I'll be right back.
He's comfortable with this IV injury system. And if you want to change anything, you just flip like index and exchange trade. Yeah. It made a tremendous difference. Take pieces off, and you can chase them on if you want to get in, and put a 3-hour limit on the step like this, and now see it move. Yeah, I can get, I should keep going, because when they just don't go, most of the but checking everything. But if it still keeps getting away from me, I just bang right on it and it just goes. Yeah, but it's supporting me off. What's going on? Yeah, cushions.
Well, I put that sell on a stop back into the market because I think the analysis is still pretty valid. I'm actually seeing that my Vol D is basically the lowest it's been in quite a while, a few hours, right? So I definitely don't want to be a buyer here at the swing line. In case someone following this methodology might be thinking, hey, maybe we could be a buyer again at the swing line and maybe grabbing a 5-6 ticks up here. At this point in time, I would not advise that. I would either advise standing on the sidelines or setting up for a short just because of what my internals are telling me. We have to be also pretty careful. You know what? Let's say we run into a situation like this, where the Stochar RSI line gets down to here, and I'm not filled. Well, I'm going to cancel my order because I really, you can do analysis and all that, but at some point you have to stop arguing with the market. If it doesn't want to go down, it doesn't want to go down. No, and when I came back, I put it right back in. I'm right here. 682.60 is the magic number. 682.60, and I'm going to patiently keep that in there until my Stochar RSI, gets down to about here. And if I'm not filled by the time that Stochar RSI gets here, I don't want any part of that trade anymore. It's exactly what Dennis said when you heard him speak. When you're a professional, the number one thing is risk, because trends happen. And if you're cautious, it's just a matter of time. And this will happen several times a week, where you just get caught up in the trend. You're just there. And if you're cautious, you're never going to take a big loss. So you put those two together, get swept up in the trend a few times a week, always take small losses. You're a net winner at the end of every single week.
What's your stop on that? Stop loss.
Well, I have to be careful with that too, because I don't really know exactly what those swing lines are going to be at that time. Also, what we're going to do, and this is the last thing we're going to do, we're going to be up here, maybe close to another half hour. Then I'm going to transition there, and we're going to take a look at the crude oil mini, and maybe we'll have some more action there. I wouldn't be surprised if that's been a hot commodity lately, as everybody knows. But let me show you a tick chart, which could be valuable in, when you go from, regular trading mode to pure scalping mode. And that sure is not it. New chart. Let's do that. That's it. Be conservative. Ah, this is telling. Let's take a look at this is the type of screen I would use if I were more interested in just purely scalping this market right now. And get a load of this. We've already flipped the swing line. We just did a pullback to the swing line. So that's pretty interesting. We broke the swing line, we broke the swing line right there, and now we've just pulled back to that swing line, and everything seems to be falling. So, that's an interesting situation. Oh, look, I'm using a 233, and most scalpers, what are they? They're using 55, 89. But what I have found when you use this methodology, you can still get some really nice trades with this. And I don't feel comfortable going much below 233. And the reason should be obvious. I'm reintroducing more and more market noise. So if I'm a hindsight, let's say all I am is a vendor of some sort, or I'm running a room, or I'm doing analysis at the end of the day, you can make yourself look really good with an 89 tick chart. Because you just don't talk about the whipsaws, you just show how early you got in on the winning trades. But the name of the game is to filter out the losers. So that's why 233 is, for me, something that I'll use, and I rarely go lower than that. You had a question?
I'm just curious, what made you choose the continuous contract on the tick chart versus the monthly chart or the current spot market chart?
I think these are all, aren't these all continuous? Yeah, this is continuous, that's continuous, they're all continuous.
I was remembering the euro.
Yeah. Yeah, what it was with the euro was he didn't have a continuous contract set up already, and you can only go back a few days on tick data, so it wouldn't look good.
Do you normally use your trading charts off?
Yeah, I do. You know what I found, that it really doesn't bother me that much. I got that half a day rollover confusion, but the carrying charge in the, that which accounts for the difference between the expiring contract and the new one becoming current, it's like 1.5 points in the Russell. It's so small, it doesn't make a big difference. And in the EuroFX, it's larger, but because I don't start trading till my time in the West Coast, 6:30, you've already had 5 full hours of London trading. So it's kind of assimilated that. On the VB chart, it's fine. Just by, even on rollover day, it's fine. So that's what I do to keep life simple. So, we really do have a market that just doesn't want to go down. So, placing your sell stop that way, I did my analysis. I think I did good analysis, and at least I didn't take a whipsaw here. And I'm still waiting here. Again, getting back to what I was saying earlier, the market's always doing an if-then analysis, right? I mean, all it's doing right now is it's really just playing around with that swing line. And if this market went up here and it rejects this quickly, that's going to attract sellers. If it trades up here for 3-4 minutes, it won't attract sellers. All right? I mean, if it goes down here, it'll attract sellers really quick, because that's what's called in chart pattern analysis a failure swing, and I ain't the only guy noticing that. But if it trades up here a few more minutes, I'm going to have to cancel my entry, because using market auction language, the market is beginning to clearly accept trade up here, no question about it. And this is really a screwy day. What can you do? Yeah, I think tomorrow, especially because we're back there, and my agreement was to spend at least 4 hours with and I should go back here, spend 4 hours with the EuroFX on my screen. I'm allowed to do whatever I want tomorrow. So I'm going to start the day back there and spend the whole day back there from 6:30 in the morning until about 1 o'clock and 2 o'clock in the afternoon. So we'll be able to, whatever market's hot, we'll be reviewing 3 markets, and whatever market's hot, we'll be able to focus on that. So tomorrow's going to be probably more fun than today. But at least today you got to hear, the setups I use, the if-then analysis I use. And, if today were a trend day, we never would have talked about the scalping. And hopefully, some of the scalping information might be useful to you in the future. It appears that we're just about in the middle again. It does seem to do like little probes that last a few seconds north or south of here. But it does seem to like really like this price. No, you can't. Absolutely none. The thing about the EuroFX, and and I say this to my trading friends, people I train, and when I speak in public, is that on the EuroFX, you're every single week you're going to get whipsawed. Okay, you're going to get whipsawed much more than in the Russell or any of the stock indexes or even in the crude oil mini now. But the idea is that when this market moves, it moves quickly, rapidly, and very far. It's going to go 25, 30, 35 ticks for you in 15 minutes. And it's clean, yeah, no, it doesn't even come, no pullbacks, nothing, it just zoom. And Friday, like yesterday, at the end of my presentation, we kind of looked at the EuroFX, what Friday looked like, and that's what you saw. You saw 40 ticks going up, and then you saw 30, 35 ticks going down, and that was all in the first half of the trading day. That was not spread out over 4 or 5 hours. That was spread out over a 2.5 hour period, where you zoomed up here, you screwed around at the top, and then boom. So that's the appeal of the euro, and a lot of traders are willing to put up with the, here's my 5-tick loss, here's my 7-tick loss, here's my 5-tick loss, now here's my 40-tick profit, now here's my 30-tick, that's the thing. So it's a different trader's mentality when you trade the currencies.
Is there any particular time of the day when?
Well, yes, there is. I understand your question. Unfortunately, where I live on the Pacific Coast, I can't really take full advantage of it. But let's use East Coast time. East Coast time, around 6 a.m., that thing is kicking really well. Because in London, they're trading at, they trade at, Swiss banks, German banks, but primarily London. Those are the big traders with the Euro USD. And those guys are really going to be very active starting at around 6 a.m. And then, of course, what starts happening a few hours later, granted, the New York banks may not open for retail trade at 9 a.m., but the currency traders, they're trading by 8 a.m. 7:30 a.m., the New York traders, the currency traders for the major New York banks kick in. So you've got, at around 7:30, 8 o'clock New York time, you've got both London and New York trading, and that's why it's such a great time to trade. And I catch the tail end of that. I start trading 6:30 in the morning. So I still usually catch a couple of swings in the euro, and then by 9 o'clock my time, I start putting the euro away unless it's a trend day. But most of the time, between 9:30, I just remove my Euro USD charts. They're gone. And I'm focusing on the stock indexes. And lately I've been bringing up the crude oil mini. You go back half a year, the crude oil mini did not have enough volume to day trade, but right now it does. And that's a market that we'll be looking at later today and then tomorrow also.
Have you ever tried like European session? Because sometimes we get a nice move like from 1 o'clock to 3 o'clock in the morning. Like today it was like
Yeah, I understand that, but it's like, I can't, I don't know, I'm not sure if your question is that a good time to trade, or Yuri, do you do that? I'm not going to get up at 1 a.m. to trade. Why would I? It's like, I love trading, and you shouldn't trade unless you really like it, but one of the advantages of trading is getting out of the rat race, right? And why would you want to create a situation that's worse than the rat race? I think we could safely move out of the Euro USD, go back to here. And following what I was saying before, more than 10 minutes have passed, and we're conducting trade here. So my scenario is now just about over. We can also see on the Russell index, that was the end of the scalper's downswing. Isn't that scary? What did it do? It went down 4 ticks. So this market just doesn't want to go down. I don't want to place an argument with the market, and I'm going to cancel my sell on a stop. At this point in time, who cares? ADD, Valdi, and move that over. Oh, look, it's a chop. What a surprise. So it appears that this downswing and that downswing resulted in about 5 ticks. What is it, 4 ticks or 5 ticks? On the bid-ask spread, that's 4 ticks. So I would be thinking about preserving capital right now. No, I'm thinking about going over and asking Mark and Denise if they want to come up here. Because what that would allow us to do is
I have my 15-minute Russell chart. And remember I was talking yesterday about those time price squares? Well, we have here for, remember it's plus or minus a bar, for 1 o'clock New York time, 1.618 in time. And I'll show you exactly how that was done. With a 2-point timing tool. Again, I'm always looking for these U-turns in the market. Once this began this U-turn and took out this swing high, I wanted to see if there might be a time when that rally might terminate. So I took the high here to the low, click and drag, and we got an earlier 1.272. And now we have 1.618 in time landing at 1 p.m. New York time. We also have 1.618 in price, which was done with the retracement tool, this high to this low. Again, it's the same swing. That's what makes it a square. And we land here with 1.618 in price and 1.618 in time. Now that makes that a potentially powerful reversal point. If it is blown through instead, it indicates that there's a high probability of a much greater rally. So we're looking now also at the 3-minute chart where I've set up support levels to see if they're broken through. If they're broken through, it's an indication that the 15-minute time price square is holding. We can also do some of the same support on the 15-minute, so you can see how this is done. I'm using the expansion tool. And again, my expansion tool is set just for the integer of 1, none of the other ratios. And I'm going to look for prior swings down, starting with the first swing into this major decline, into where the rally began after that, I should say, and project from the high. And we have another one here. And that would be our major support on the 15-minute chart. And I'm also going to use some Fibonacci retracements to see if it clusters anywhere together. Just get rid of the ones that are standing alone. And now we have a couple of levels of the symmetry support with overlapping Fibonacci retracements. Okay, did everyone see how that was done? And now we wait and see if that extension, which is pretty key because it's from a pretty large swing, if that holds, it'll be the beginning of a downtrend. Or if we rally off of some of that support and look for buy opportunities. We had a couple of trades this morning, if you were back there watching what we were doing, and now of course it's lunchtime, so things are kind of slow. Is there anything in particular I should be looking at, Denise?
Yeah. Basically, you know, we're still in an uptrend in the ER, if that's what you want to call it, so we are looking for longs. Ideally, what we would want to see, because we have support on both of our time frames relatively close, if you're following CCI at all, you would be looking at your 250 volume or 133 tick for a 50-14 setup to get you long into this trend. That's pretty much what, you know, I'm waiting for and I'm anticipating. The closer we get into that cluster, the better we'll be.
And there's my 233, which would I use 233 because
on
E-signal.
that was what it would correspond. So we'll keep an eye on Mark's chart and we'll watch it on there to see if we can get the trigger. And if we do, I will certainly let you guys know.
Okay, and was there something going on in bonds, or?
No.
No, nothing at the moment. Okay. Well, let's take a look at the chart, though. I was looking before at the 3,000 volume bond chart, and yeah, that made the targets. Excuse me. I think Sammy was happy about that. So are there any questions about how this work is run, the Fibonacci aspect of it, or the CCI triggers?
Mark, the settings that you do for, let's say, the expansion lines are those global, or are those can you set them differently for every chart?
Well, you can set the tool, set a default setting, and then that would be global. But then when you go into, for instance, if you were to right-click and choose Edit on any retracement series, it'll show off the check boxes will be the ones that are still showing on that chart. If you delete one, it'll uncheck. So you can check it back on. You can make changes or put in a different ratio specifically for that. Yes, it's global. It's global. As soon as you hit Save as Default, it's going to be global. No, I don't think so. No, there wouldn't be. That's global in the program. So yeah, if you wanted to use a totally different set of expansions for a different technique, you'd have to change them manually. Bless you. The one that says timelines is the 2-point. Okay. When looking for these time price squares, you use the 2-point tool because we're trying to measure a prior, in this case, a prior decline, and then multiply by 1.272 and 1.618 in time forward. The 3-point tool would be used. I'll give you an example to measure prior rallies. For instance, we could go here to here. This is the 3-point tool, the time expansions. So we would measure this prior rally, and then, oh, I must have clicked the 2-point. Never mind. Do that again. Measure this prior rally, and then project from the beginning of another rally. And you see, look at what happened. This rally also terminated, if you project it forward from the beginning of the new rally, at 1 p.m. So we actually have an overlap between the time price square aspect, the extension. Right, okay. Well, I just figured I'd kind of use your question as a way to jump into the differences in the tools. So I appreciate that you asked. What's the price? Yeah, it says it. Okay, so we're still waiting to see if we're going to react off that extension. It looks like it is at this point, but the indication that that rally is terminating would be losing some of the support symmetry on the shorter term.
I didn't want to have you repeat the same.
Oh, that's okay.
But I can, the timelines is the 2-point one.
Right.
Okay. That's the one we use for Times Square.
Right, and that's the one you use mostly. For finding overlaps too. We're running from different highs to lows, lows to highs to see if you get confluence.
Yes.
The 3-point tool is specifically for in the direction, like currently the market has been extending upwards, so you'd only be taking prior rallies and then projecting from the beginning of the current rally.
So this is the project continuation of a
Right.
move.
Okay, I was just describing the 2-point tool, timing tool, is the one that you're going to use mostly. It's not just used for time price squares, it's used to connect any outstanding prior high and low, to look for situations where you get confluence, where you get a lineup in a specific bar. The 3-point tool is always used in the direction of the current market move. In other words, we're rallying and we're taking prior rallies and projecting from the beginning of the current rally. And we did happen to get an overlap here, which adds to the strength of this 1 p.m. termination of the rally possibility against that extension. Yeah. Well, you choose highs and lows, yes, the 2-point tool. Well, the 2-point tool is to find the directionality of the, in other words, the 3-point tool really can't help you, the 2-point tool really can't help you with directionality. It just says something is going to happen when you have a confluence. But when you can overlap that with the 3-point tool, which gives you the direction because you're taking a prior swing in the same direction. This was a rally, so we took the low to the high, and then projected to count forward the same number of bars. So we're saying here the rally terminated, and here's the same bar count. And not only that, but it's overlapping the time price square possibility. So it adds oomph to it. But yeah, the 3-point tool you only use in the direction of the current market move. That's why we don't use it. For instance, I wouldn't have used, there would be no reason to use the 3-point tool when we're in the middle of a prior swing, because which direction are you looking for? If the market is currently right in the middle, not extending in one direction or another, then you can't choose which direction is significant. Exactly. Yeah, you only use the 3 points in relation to what's going on now. When might it end? Yeah, when might it reverse from there? And really, timing is only valuable when the market is extending in one direction or another. If it's in the middle, there are ways to play with it. You can kind of get an eye for that after a while, where you can actually time when a congestion period might end. But that's a lot more tenuous than termination of a rally or decline. Okay, Denise, are we seeing anything happening on the?
Nothing yet.
Okay. Anyone trade today? Oh, Worry, what's up?
What's the question I'm asking is, when do you decide whether to take from high to high, or when to take high to low?
Well, when do you decide whether you're connecting highs to highs and?
Or highs to low?
Okay, in the case of the 2-point timing tool, you do all of them. In other words, I don't have as many timing confluences up there as I could, because I'm focusing on this squaring possibility. That's the most significant thing that I see right now. But ordinarily, if you don't see this clear U-turn pattern to try to look for a time price square, let's say the market is just going up and down and you want to see when it's going to reverse off that, you would take every standout high and connect it to every other standout high, and same with the lows, and highs to lows and lows to highs. You do all of them, and basically it'll jump out at you that there's a specific bar or within 1 or 2 bars of each other where they're in alignment. The ratios that are projecting forward are lining up. Just delete the stuff that's already been crossed in time. And those are going to be jagged all over the place. We'll have plenty of opportunities to run those and show. Just right now we're waiting to see what's going on here, and I think Denise is hoping that my timing for short. Yeah. Or if it doesn't hold, if the timing doesn't hold, you might get, would you be looking for?
I'm waiting to let that timing pass right now because what I'm seeing is not agreeing with going short.
Right.
So if anything, if I were in a long, I would be keeping a close eye on that timing, and I'd be looking for divergences to confirm it and to exit my longs. Because I don't counter trend trade, I wouldn't be looking for a short. But those of you who do look for shorts, I would be looking for my median time frame CCI to cross through the 100 off that timing high, and that would be a very nice counter trend entry.
Thank you. So we're at a point here where market has to make up its mind for us to see the direction. Once timing passes, it's quite possible that the rally will resume, and the timing might have only given us a pause. But you generally get something happening when price and time come together. And what we have now, what it's given us, is boredom. So,
Well, this is where the discipline comes in.
yeah. Would you rather use this? Okay. Well, what's happening, it can't be recorded. This is the issue. Is there any other market we should be looking at?
Want to throw up a bond?
Blech. Let's see the bonds. Okay, 3,000 volume?
Yeah.
Yeah. Okay, we're going to look at a bond chart again. I'm going to set this back up. Okay, let's go over what I'm going to do with this bond chart. I'm going to get rid of everything and start it from scratch. All right, clearly a downtrend. So again, I'm going to take my expansion tool. It's really simple once you run a few of these. I took the swing into the high, and I'm projecting it from the low. And we have smaller ones in here too. So we have resistance right there at 115.25. I don't particularly care for this one because we made another top here too. You know, the same, I like the larger one is what I'm saying, because the smaller you go with these, the less power they have to necessarily hold the market. And not much happened after this one. It immediately went back up. So I'm going to use that one, and I think that's it for the symmetry resistance. And now we'll look at outstanding highs, always only to the new low. And this one. And now we'll get rid of anything that stands alone. We don't care about the extensions right now because we're not looking for a target. We're looking for what the resistance is. And where they're clustering together is where we have the most powerful resistance. See anything interesting? We're in a different time frame, or?
No, that's a good time frame.
Okay. Now, because this is a volume chart, I can't do timing on it. So I'm going to put the resistance there, but I'm going to just check for timing possibilities on my 15-minute bond. It's possible. That's why I'm checking. Denise was saying she'd like to see if there's a timing low in this, and that's exactly what I'm going to be checking for.
And I only say that because the higher time frame ZB has crossed, the 50 CCI has crossed the negative 100 line, just kind of hinting to me that the momentum to the downside is at least waning temporarily. And if there was a timing low setup in there, I would be very inclined to start looking at my lower time frames for long setups, even though it would technically be counter trend. If most of you who know how I trade, I will start looking at the opposite side once I get that 100 line cross and close. I'll start, especially if there's if Mark posts a charting reason for me to do so, I will start looking. So if we have that, that's what we're going to do.
Okay, and what I'm going to do is, since I have a nice blank chart here, I'm going to show you guys about the swings, choosing the swings for the timing. I'm going to start with a 2-point tool. Now, I think we can all agree this is a standout low. I'm going to take that low to the highest high after it. Okay? And now I'm going to take these highs and connect them. Basically, I'm just looking for anything that's screaming, I am a significant turning point, significant pivot.
So if we were back before that high that you're on now,
Yeah.
you would have low to the previous high.
Right. I mean, I can go back. The goal here is to find a confluence, an area, a bar where these would overlap. And the closer to the present that you come, the shorter the swing that you can use, because you want to focus on more on what the current market is doing. The more into the past I go, the larger swings is what I'd be looking for. So for instance, another thing you learn about this real fast is if I went from this high to this low, none of the ratios are going to carry all the way into the current time frame. So it's too short, yeah. So that's another reason why the more into the past you go, the larger swings are what you're looking for. Okay, like we could take here to here. Okay. And if you just switch to your arrow, in case these are getting messy, you can just drag this wherever you want it. I'm control clicking now to delete the stuff that's passed. Okay, and what do we have so far? We have a couple of ratios up here for, what time is it now? Okay, I have a couple of overlaps for on the low.
Okay.
But let's see now. Let's see if we can add something with a 3-point tool. I'm going to get rid of these. Get rid of anything that's passed because there's just chart clutter. And I'm going to take the 3-point tool and I'm going to take a prior decline. In the case where there's several bars at a top, like I just had there are like 3 bars at the same price, I take the first one as the point where the high was made because that's when the high was made. So I'm going to take that prior decline and go to the top of this decline. And that is too short. Everything there that I would use is already passed. So you get rid of that. You can go back though more. I'm not going to get fictitious though and pretend that the decline started at a certain area. So instead, I don't really see anything where the 3-point tool would be helpful. Instead, what I'm going to do is look, because I'd like to find one more confluence in time, one more overlap. So I'm going to take another high. How about the highest high in the chart would be good, to the low here. And it's still not quite doing it. I would have to call this a weak overlap, Denise. Yeah, it's kind of weak timing. Okay, did that make sense to people about how the timing was done? In other words, I'm looking, see how these have clustered together here? This is 11:15 to 11:45, so I'd say 11:30. That's Chicago time. Chicago time or New York time?
Yes.
It's current.
Yes.
Yes, yeah. Oh, I get confused because the bonds are on a different, I know, but I'm used to, the timing shows up differently within the Chicago versus the markets I have set for New York time, even though they're in Chicago too. Go figure. Well, the point is it's now. There's also stronger timing for too late in the day, like 6 p.m. So yeah, you have some timing. You see anything interesting there on a different time frame to?
No, I don't see anything setting up, but I just wanted to.
Okay, what's happening on our Russell? Russell, the support is still holding. Okay, now that this is held, if someone got a buy trigger off this, you didn't get a buy there on the Russell? Okay.
The pullback wasn't deep enough.
Well, yeah, this is very shallow. And what you do here, though, if you were still in and you wanted a target, retracement tool, high to low, get rid of the retracements themselves, and the extensions would be your targets. Now, as Denise said, the pullback was so shallow that it would depend on what you're using as a trigger. I mean, CCI didn't give enough for that really, and also the targets would be very close by. By the way, you frequently see a shallow pullback to support like this when the rally is indeed terminating. The pullbacks get shallower and shallower, and as a result, the 3-minute targets get closer and closer, and the trades become almost not worth doing, because by the time you're triggered in and filled and everything, you have to face that resistance. So yeah, I don't see that as a particularly exciting trade. And even the 3-minute, lost the 100 line again. How's the 233? If you were still in, though, there would have been no reason to get out. Yeah. Yeah, here was the divergence on CCI when we hit the timing, but the support's still holding.
Slow grind up.
Yeah. It's been a slow day, but we did have some entries before.
We might all be open, but if we get some news tomorrow in the morning, we might rock and roll, at least get this market moving.
Yeah, it's,
When you're getting
well, no, you know what it is. You know what it is also as Denise just said, but I'll translate for you, because. No, I'm giving you credit for the idea. There's a lot of news due out in the morning. There was no news today, and a lot of people are waiting for some oomph to get this going based on what's happening in the news. You still?
I'm not sensitive. Okay. If I burst into flames, put me out.
So is anyone up here taking any trades today? Anything? No.
On the euro.
On the euro.
And I'm even, and I feel good about it.
Oh, good. No Russell trades? Okay. Yeah, this is.
Lunchtime, right?
Yeah, it's lunchtime. I mean, not for us, but for the markets. Yes. Sorry.
Using the 3-point time that you do is one of those, and just pick random points or whatever. And
Do I choose random ones?
well, I was just trying to mechanically get that to work last night.
It didn't work, meaning the result wasn't significant?
Yeah, we didn't get lines.
Well, we'd have to look at the settings in your. You didn't get anything coming out on the screen?
Yeah,
Well, possibly your settings need to be adjusted.
I just used the default.
Okay, well, it's possible that the lines might be set to the same color as the background color of your chart, which would make it look like nothing's coming out.
Then, mechanically, click on, you go left to right, 3 clicks.
Yes, left to right. Well, the 3-point timing tool, you're looking for prior moves in the direction of the current move. Okay, so in other words, if I consider this the current rally, because we had a little pullback here, so if I consider this the beginning of the current rally, I need to find prior rallies. So what I did here, this is the 3-point tool. What I did was I took the beginning of the prior rally, click, drag, click and let go at when that rally terminated, and then a third click at the beginning of the current rally. Ron, were you saying something?
Minus 300.
Okay. Sure. Okay. Right, yeah. All right, it's a good opportunity to do that since the market's so exciting. I just wanted to take an opportunity, and Ron reminded me to go over the tool settings again and the colors. And again, you can make these any colors that you want. It's just, I think it's a good idea to choose specific colors for different fib ratios, because that way, when you're looking at the chart, you can immediately get a sense of the importance of any given cluster.
Yeah, and that's,
This is the expansion options screen, the expansion parameters. I almost always just use the value of 1. These others are unchecked. I do have 1.618 set up and ready to go in case I need it. And that we'll have a situation where I can show you when that would be used. But generally it's 1, and I have that set to red because I really want that to stand out. The retracements, actually let me draw a new sequence for that, because I just want one that's showing everything. This is how I have my settings. I like to hide the 0 and 100 lines. The 0 and 100 lines would just give you a line at the beginning and end of the swing, and it's just clutter on the screen. We're not interested in what we chose as the high and low. Extend to end is going to give us the different lengths in the lines, so that we can judge the power, how long that retracement cluster has been in place. So use extend to end, show from rightmost point. Also makes it neater. I mean, you can play with these options the other way around and see if you like it better, but I've found through a lot of time and trial and error that this gives you the best combination. And again, I use 236, 382, 0.5, 0.618, 0.786, 1.272, and 1.618. And you'll see I put down in the workbook the relative strengths of those relationships, those Fibonacci numbers. The 618 is the most powerful, so I have that set to a different color so it stands out. And the others are kind of supporting players. I like the 786 also, I mean, if that's overlapping symmetry. And the green extensions are the targets. And again, it's just convenient to have them color-coded that way. The timelines I have set the same way, with the same colors, just to keep it consistent. Oh, this thing is garbage. I just put that up there to show the edit menu. Yes? That's 14.6, and you can do that instead of using the Woody combo there. You can just put up a 14 and a 6 by choosing the commodity channel index. You're going to get the same result, and I just frequently use that because it's just faster. Well, no, we do use it when we have the 50-14-0 set up. Yeah, and frequently we'll also see it when we have, for instance, a 100-line bounce on the on the 50, and then we're looking for like the 14 might give us a slingshot, and now it looks like we're challenging that support again.
What I'm looking for is a little bit deeper of a pullback to the next level of support for a 133 tick or a 233, depending on what feed you're using, for a 50-14-0. Currently, the 50 CCI is over the 0 line, and the 14 is right now at the -100. So if this support is going to hold, you would start to see that setup forming on your charts.
So in other words, you're looking for a reject of the 0 line with a 14 at this point, or dip down. I am translating that.
I know, I just said that it's at the -100, and I'm looking for
What's the negative one?
14.
On the 233? Mine is it?
Look, honey. Yours is.
The 14 is at the 0 line.
Oh, your
That's the turbo.
mine is. We got different data.
That's why I'm trying to.
That maybe because you were disconnecting yourself?
No, I updated the data. The data's up to date. Okay, we are losing the first level of support on the 3-minute. I'm going to take out these targets because obviously if you had gone long there, you would have been stopped out. And actually on the 3-minute, since I'm beginning to make a new low, I can already start to look for resistance. You see, we took out the prior lows. I'm going to take the prior rally here, not rally, but a little prior swing up and project from the new low. And I'm definitely going to tell this one to keep live, because if we make a new low, that'll just move down with it. I can't take this swing into the high yet as resistance because it has not yet been broken. It's not been violated by the new low. And I think we're going to wait and see how this sets up as people get their lunches. So yeah, I mean this actually, if I were trading without Denise's multiple time frame element, yeah, the support is holding. You could have, the only way to take this trade would have been if you were looking for this support on the 50-minute as a target, and that's about it, because the timing did hold for the high, but it took us right into this support on the 15. Now, if that support breaks, we have a nice distance down. If it breaks. If it holds, so you're looking for long still. Okay. No, because the higher time frame stuff is still pointing long. Okay, and again, our resistance levels on the 3-minute have updated automatically. And if you are looking to short, you would look for a pullback to this area. But we're still looking for longs because the longer term support, which we're right up against right now. And it depends. If you were into scalping, you could have taken that trade and gone right down to the support. But our strategy is really to look for direction of trend. So we're looking for resumption of the trend against the longer term work.
And additionally, if you were scalping, you would have been in a lot earlier than just that 3-minute 50-34. What you would have done is against that, you would have looked for a 100-line cross on your 50 CCI in whatever time frame, and that would have been your trigger. If you were doing a counter trend scalp, that's what you would have been looking at, and then you would have just trailed it down to the 0 line and so on and so on. Like right now, you'd be looking at it saying, oh, maybe it's time to get out because I'm starting to get that flattening.
If you notice on the 15-minute chart, the 50 CCI is just now in contact with the plus 100 line, and the shorter term CCIs could indeed pull us right back up off of that longer term support. That's why we were not interested in the shorting possibilities on the right. Right, that's what I'm pointing out, because the other than just a quick scalp, which is not our methodology, we're looking instead for a long trigger. In this case, it would break the resistance on the 3-minute, but it would be much more in alignment with the longer term.
Now, if you're watching it, this is again why I